Okay, let's have a look at this question then. So it's a step acquisition question, and as usual though, we just get straight on with S's equity table. So we have year end, we have acquisition, we have post acquisition. Whatever goes into S's equity will go in here. So share capital and retained earnings, straight from the question though, 100 and 31,700. At acquisition 100, and then the acquisition actually occurred 2 years ago because that's when we took control. So I want the retained earnings 2 years ago, 9,440, and so I just get my calculator out and I say 31,700 minus 9,440 gets me 22,260. Then I add those two together, 9,540. That's the book value of the equity. I want to compare it to the fair value of the equity, and its fair value was 10,070. So 10,070 minus 9,540 gives me 530 fair value adjustment. I want to see what's caused it, and it's PPE that's caused it with a 5-year useful economic life. So 530 divided by 5 times by the number of years that I've had it. So 530 divided by 5 times by 2, let me just get that right, divided by 5 times by 2 is 212, which would leave me then with 318. And I have to go and put 318 onto S's PPE, which I will now go and do. So plus 318. So far so good. Add down my post acquisition. So 22,260 minus 212 comes to 22,048. Super. So now I can get on then with my goodwill working. Fair value of consideration. It's proportionate NCI, and the fair value of net assets acquired I have just calculated here, look, to be 10,070. So therefore, the proportionate NCI, well, I own 80 plus 10, so I own 90. So proportionate NCI would be 10% of the 10,070, which is 1,007. And then the fair value of consideration, what did I pay for it? Well, I paid 9,600, and that was 2 years ago, and I paid 1,000, but that was 10 years ago. What I need to do is revalue that 1,000 to what it was worth 2 years ago. And here it is, look, the fair value of the original 10% 2 years ago was actually worth 180. So I have to add on 180 there. So if I put all of those together, then I will get 10,780. So 10,780. Now I can add that down then. So get the calculator out. 10,780 plus 1,007 minus 1,070 gets me 1,717. Impairment 189. Impairment 189. So minus 189 gives me goodwill of 1,528. So I just simply pop that in then. Goodwill is 1,528. Now, I want to do retained earnings next because I want to remember that 180. So retained earnings, all of H, straight from the question, 84,700. But it's also made a gain on that original 10%. So the gain on the step acquisition on the original 10% of 180, that goes in there. Okay, so I've increased it in the fair value consideration and I've increased it in retained earnings. That's the double entry. So that's good then. Then I want my share of S. So it's my share of that 22,048. I own 90%, so 22,048 times by 90% gives me 19,843.2. Then the impairment of goodwill, because it's proportionate, the impairment is all mine, and then I can add it down then. So, 19843.2 plus the 180 plus the 84,700 minus the 189 comes to 104,534.2. 104, he says, trying to remember, 104,534.2. Now I can do NCI. So NCI, at acquisition, always the same as what you had in goodwill. So at acquisition 1007, plus post acquisition. So they deserve 10% of the post acquisition, which is here, look. So 10% of 22048 is 2204.8, isn't it? And no impairment, so it's just a case of adding those two together. 1007 plus 2204.8 comes to 3211.8. If I put the 3211, NCI, 3211.8. Share capital, always just a holding company, and then it's a case of adding across those net assets, so 74,200 plus 31,800 plus 318 comes to 106,318, and then let me check that this all balances. Add on to that then 106,318 plus 1528 gives me 107,846, and then hold my breath, 100 plus 104,534.2 plus 3211.8 equals, yes, 107,846. Hey, we've done it.